Good afternoon, ladies and gentlemen. Welcome to today's webinar hosted by Coronation Asset Management. My name is Adiola Aditola, and I'll be your host for this webinar. I'm delighted to be your moderator of this highly anticipated session. Our theme for today is the benefits of dollar-denominated investments. A topic that couldn't be more timely considering the dynamic economic landscape we all navigate today. Over the next 2 hours, we'll unpack why diversification matters, explore practical strategies for balancing local and global exposure, and spotlight how the Coronation Dollar Fund can help you protect and grow your wealth. Quick housekeeping before we start. This session is being recorded, and the recording will be shared with you after the webinar. Please submit your questions using the Q&A box at the bottom of your Zoom screen, and we'll address them during the Q&A segment later in the webinar. And for the best experience, kindly stay muted and use the chat for all comments and engagements today. Here's what to expect in today's session: an opening remarks from our leadership, a keynote presentation on the benefits of dollar-denominated investments, a panel discussion with seasoned experts from Coronation, and finally, a Q&A session to answer all your questions. So let's dive in. To kick things off, please join me in welcoming Yemi Shoneye, Chief Operating Officer at Coronation Asset Management. He will usher us in and set the tone for this conversation today. Sir, the floor is yours.
Thank you very much, Diola, for that introduction. Good afternoon, distinguished guests and valued participants. Diola introduced me earlier. I'm Yemi Shoneye, the Chief Operating Officer for Coronation Asset Management, and it is my pleasure to welcome you to today's highly relevant webinar on the benefits of dollar-denominated investments. Kindly allow me to first express my sincere gratitude to each of you for taking the time to be here. Your presence reflects a shared commitment to not only informed investing, but building sustainable portfolios in a rapidly evolving global environment. At Coronation, we believe that financial empowerment starts with knowledge. Therefore, we consistently create platforms like this to foster meaningful conversations, deepen financial literacy, and equip you with tools to make confident and strategic decisions for long-term wealth. Today's focus is critical. Diversification is no longer optional. It is a necessity for resilience. It is not about replacing one asset with another, but achieving the right balance that enables your portfolio to withstand volatility and deliver value over time. In this context, dollar-denominated investments plays a pivotal role. For investors seeking to manage currency risk, diversify their portfolios, and tap into global opportunities, dollar-denominated investments offer a strategic layer of stability within a well-balanced investment plan. Our Coronation Dollar Fund was built on this philosophy, giving individuals and institutions access to high-quality, dollar-based fixed income securities, prioritizing capital preservation, steady income, and liquidity. The session will highlight diversification matters now more than ever, explore how dollar-denominated investments complement Naira assets, provide a practical guide to getting started with Coronation Dollar Fund. We are honored to have an exceptional lineup of speakers whose expertise will make this session deeply practical and insightful. Taiwo Olatunji will share strategic perspective on portfolio resilience and why dollar-denominated assets are increasingly essential in today's economic climate. Somkeneji Preze will provide practical insights on structuring portfolio and managing fixed income investments for optimal performance. Ezima Ileka will unpack the macroeconomic and FX trends, shaping the attractiveness of dollar-based investments and share strategies for navigating currency exposure. Abisola Amzat will offer wealth management strategies that help you use dollar assets to preserve and grow wealth over time. Together, the perspective will equip you with actionable strategies, whether you are seeking to protect your portfolio, diversify effectively, or explore new opportunities for growth. We encourage you to make most of this opportunity. Engage actively, ask questions, take away insights that will strengthen your financial journey. At Coronation, we consider ourselves your prosperity partners. Our commitment is to support you with smart, practical solutions that align with your financial goals and help you build long-term value. Once again, thank you for joining us today. We look forward to an enlightening, impactful session. On that note, I'll hand over back to Adeola. Over to you.
Thank you so much, Yemi, for those powerful opening words and for reinforcing Coronation's commitment to delivering smart, forward-thinking investment solutions. Now it's time for our keynote session, a deep dive into why dollar-denominated investments are becoming an essential tool for portfolio resilience. Our keynote speaker today is Mr. Taiwo Olatunji, Group Head of Investment Banking at Coronation Merchant Bank and the Secretary of the Association of Issuing Houses of Nigeria. With over 18 years of experience spanning financial advisory, capital markets, and project finance, Taiwo has advised top-tier clients across multiple sectors and holds a master's in finance from the London Business School. He's also a CFA charter holder and recently completed an executive program on infrastructure financing at Harvard University. Today, Taiwo will be speaking on the benefits of dollar-denominated investments for portfolio resilience. Taiwo, we are honored to have you with us.
Thank you very much, Adeola. Good afternoon, distinguished guests, colleagues, and fellow investors. It is a pleasure to be here with you today to share some thoughts on a topic that is not just timely, but increasingly essential: the role and importance of dollar-denominated investments. In a world where markets are increasingly interconnected and where currency, inflation, geopolitical uncertainties shape our economic destiny, we must ask ourselves these questions. Are our investments truly built to give us the lifestyle that we want? Are we saving money today that can save us tomorrow? Over the past decade, the Naira has constantly depreciated against the dollar, from about 160 Naira in 2014 to over 1,500 today. Specifically in the last 2 years, we have seen firsthand how foreign exchange inflation and market volatility eroded our purchasing power, making a substantial dent in savings and long-term financial plans. What this tells us is very simple. The Nigerian investor is much more exposed not just to market risk, but to currency risk, liquidity risk, and political risk than the average global investor. Hence, the fundamental question that every investor must ask is or herself: how do you protect and grow your capital in a world of increasing economic uncertainty in a way that mitigates local currency devaluation and inflation while preserving our purchasing power? The answer is simple and clear. We need to hedge against all this risk mentioned to ensure our investment address our lifestyle objectives. Today, we're going to explore a proven and logical solution to this challenge: dollar-denominated investments. Our panelists will discuss how diversifying your portfolio with assets based in the world's most stable reserve currency can provide a strategic edge against local market risk and unlock access to global opportunities. We will also present a compelling case for a shift towards dollar-denominated investments. This is not about abandoning your local capital market, but rather about building a more robust and diversified portfolio. We will analyze the core principles behind the strategy and ensure it can serve as a cornerstone for long-term personal aspirations, wealth preservation, and growth. To ensure we get the most of today's webinar, I would like you to picture your ideal future and start to plan your investment to achieve this. What are the lifestyle aspirations that dollar-denominated investments can address? I would like to ask the person controlling the presentation to please move to the slide that shows that. So, what are the lifestyle objectives we need to address to ensure that we get the most of today's webinar? Your lifestyle aspirations are the things we need to focus on. And I'll start with the first one. What's the peace of mind that you would like to have, knowing that your child's university education abroad is secure, no matter what happens in the local economy? Secondly, the ability to pay for any medical treatment for yourself and family members anywhere in the world. The freedom to travel without worrying about the exchange rate. Lastly, the joy of retiring comfortably, enjoying your hobbies and your family without the stress of an unpredictable financial market. That future, that feeling is what we're here to talk about today. We're not just talking about investments. We're talking about building the foundation for the life you truly want. And a crucial part of that foundation is understanding the power of dollar-denominated investments. Our lifestyle is at risk and we need to mitigate this risk. We all work hard for our money. We make sacrifices today for a better tomorrow. But what if that tomorrow is being silently stolen from you? All of us have seen our local currency fluctuate. We've watched the cost of imported goods, from our favorite gadgets to essential medicines to food, creep up in the last 2 years. This is not just an economic statistic. It's a direct hit to our lifestyle. It means that the money that we have saved for that dream vacation is suddenly worth much less, eroded. The college fund you started in Naira for a child's university education abroad can't pay the full tuition fees by the time that child is ready to go to university. This is the hidden cost of putting all your financial eggs in one local basket. It's the risk that your future lifestyle is not entirely in your control. Dollar-denominated investments act as a shield to this. The investments are a financial life raft in an unpredictable sea. They allow your savings to grow in a stable, globally recognized currency, protecting your purchasing power and, more importantly, protecting your dreams. So in order to take this forward, we need to understand what tools are available for this dream lifestyle. How do we avoid these pitfalls going forward? We understand by understanding the tools available to us. Think of this as the building blocks for the lifestyle you aspire for every day. Think of the 3 investment objectives that your portfolio should achieve. And what are these objectives? Number 1, capital preservation. We all seek stability and protection of our investment principal. Number 2, capital appreciation. We want our money to grow over time. Lastly, income generation. We want tangible periodic cash flow from our investments to sustain that lifestyle that we dream about, to be able to travel, to be able to pay for our children's school fees with ease. So what are the investment opportunities out there? We will start with the first, mutual funds and exchange-traded funds. For those who are new, these are the investment this is the investment tool we would recommend to you. It provides you with simplicity, peace of mind, and it enables you to have an emergency fund for international payments. Mutual funds let you invest in a wide basket of securities, while exchange-traded funds let you invest in US companies with a single click. Mutual funds are similar to investing in a piece of US investments available locally, while the ETFs are like buying a piece of the entire US economy. This strategy is about saying, I believe in global progress and I want my savings to grow with it. The second investment tool out there is the bonds. And these are for people who crave stability and income generation. The kind of stability that lets you sleep at night. And what are the tools out there? There are Euro bonds by sovereign and corporate issuers, US Treasury bonds, and the UK gilts, which are available for people to invest in. They are safe haven for your capital, providing a very predictable return that can secure your children's education fund or your retirement fund. And this allows you to even live a good life in your old age. The third tool, which we recommend to you, are international stocks. And these are for people or investors who are looking for capital appreciation and income generation. Imagine owning a piece of the world's most innovative companies, the ones that create the smartphones you use, the streaming services you enjoy, and the technology that powers our modern world. When you invest in these companies, you're not just buying a stock. You are connecting your financial future to the engine of global growth. These are the investments that can take you to the lifestyle that you desire. We would like you to take control of your life, of your journey, of your lifestyle. So this journey is no longer reserved for the wealthy or the well-connected. The digital age has democratized access to the world's financial markets. Today, with just a smartphone and an internet connection, you can open an investment account and start building your dollar-denominated portfolio. The entry barriers have been lowered, making it possible for anyone to begin. My challenge to everyone on this webinar is to take the first step. Don't wait for the perfect moment. There's none. Start with an amount that feels comfortable. Educate yourself, but most importantly, begin building the financial bridge between where you are today and the lifestyle you want to live tomorrow. In concluding, your financial journey is not just about making money. It's about making a life. It's about protecting the dreams you hold there and creating a future where you, your family, your loved ones have the freedom to live the life on your own terms. By embracing dollar-denominated investments, you are not just diversifying your portfolio, you are fortifying your future. You are giving yourself and your family the gift of security and opportunity. I would like to thank everyone for being here today and for taking this step toward a more empowered financial life. I'll be happy to take any questions you have before I hand over to the panelists that will be giving you practical solutions into how you get into dollar-denominated investment. Thank you very much.
Thank you so much, Tyrell, for that enlightening presentation. You've given us a clear picture of why diversification into dollar assets is more than a trend, but a necessity for resilience in today's market. Just like you said, a few questions, and I do have some questions before you go. So I'll start off. Why should portfolio resilience be top of mind for investors in today's economic climate? And how do dollar-denominated assets contribute to that?
Adiola, thank you for that question. A resilient portfolio is designed or is required to withstand any economic shock you might face. And it enables you to maintain the value of your investments over time. We're not saying that the portfolio will avoid risk, but it manages the risk better. So key principles why you need to have a resilient portfolio. One, it helps you to diversify. You earn returns in different currency across different asset classes and geographic regions. It helps you to actively manage the risk and ensure that your risk tolerances and objectives are mitigated. Sometimes you have to rebalance your portfolio to ensure that your risks are reduced or increased to improve your returns. And lastly, resilient portfolio allows you to think long-term. Case in point is if you are looking to save for that child's education in America, and your child is 2 years old today, if you do a simple analysis and say, okay, I need about $200,000 for my child to go to a top school in America, why don't I save $10,000 every year towards that goal? And by the time that child is ready to go to school, you won't be worried about looking for dollars. We'll say the exchange rate might be 3,000 to the Naira then in 18 years when that child is ready to go to school. So that's why we always say a resilient portfolio is what we advise you to invest in. Thank you.
Absolutely. And then coming right up, I do have another question. What are the key benefits of incorporating dollar-based investments into a portfolio dominated by local currency assets?
Okay, there are a few key points and benefits of this. One, you're hedging against local currency risk. And we've seen that in the last 2 years when the Naira was devalued, and over time, everything just went up. Rent, food, and the Naira hasn't caught up to that, even though in the last few months, we've seen the capital markets start to appreciate. But within that lag in catching up, people have suffered, or their investment portfolios have suffered because people had to dip into their investments to keep up with the standard of living that they were enjoying. Secondly, a benefit of having dollar-based investments that you are diversifying. You're not putting all your eggs in one basket. Diversification is a fundamental principle in investing, and it extends just beyond asset classes. So some people will tell you, oh, we have assets in real estate, in equities, in bonds, but you also need to have assets across currencies. And that's why we're saying if you have a Naira dollar currency in your portfolio, it further diversifies your portfolio and gives you access to other economies that are doing great things. Lastly, the US dollar is a stable saving haven currency. And when in times of economic crisis or heightened market uncertainties, we find that investors globally, they often flee to that perceived safety and liquidity of the US dollar, which enables it to strengthen over time and provides a buffer for a portfolio during periods of global stress. So these are the benefits of investing in dollar-based investments.
Absolutely. And from your vantage point in investment banking, what trends or signals should investors watch for when considering foreign currency-based investment opportunities?
Okay, so when you're looking at investment, key things to watch out for. What are the monetary policies globally, especially the US? Are interest rates going to go up? Are they going down? If interest rates are going up, you might want to look at equity at that point in time, or you want to wait till when those rates are where you expect them to be, then lock in at the higher rates. If inflation is going to go up, you want to wait till when inflation gets to where they are and lock in at higher rates, or you lock in at rates now when you think rates are going to go lower. What are the geopolitical stabilities around the world, and how do we consider them? These things also impact our portfolios, and we need to ensure that we look at all of them. For equity, what I'll typically tell people is that you look at the dividend yields. Is it a company that's been paying dividend over time? how much does the majority owner have in the company? Are they buying more shares? Are they selling down? When you see a majority stakeholder in a company buying more shares, it's trying to tell you it believes in this company and this company is going to continue to grow. We've seen that with the likes of NVIDIA, with the likes of Amazon, with the likes of Apple. They're going to grow. And you're going to see the major owners going to invest more into those companies, given all of the innovative investments they are making to ensure that they are at the forefront of technological innovation across the world. So those are the things to look out for when making investments in foreign currencies.
Okay. Again, Taiwo, thank you so much for your time and for your insights. For me, the thing that keeps popping up is just diversification and being able to get returns and diversify your currency returns is an important consideration for people looking to invest in USD denominated assets. So thank you for your time, for your insights.
Thank you very much, Adiola. Happy to be here. And cheers, everyone.
Before we move on to the panel discussion, for my participants, there's a poll coming up now. Please take a few seconds to fill in your answers. Now joining us for this very important conversation are three incredible professionals: Somkene Jipreze, Portfolio Manager at Coronation Asset Management; Ezimai Ileka, Chief Dealer at Coronation Merchant Bank; and Abisola Hamzat, Team Lead Wealth Management at Coronation Asset Management. Let's get started. So welcome to all our panelists, and thank you for joining us on this very important conversation on dollar-denominated investments. We have a distinguished panel here today, and I'm excited to dive right in. So Somkene, let me start with you. From a portfolio management perspective, how do dollar funds like the Coronation Dollar Fund complement Naira-denominated investments?
Hi, Adela. Good afternoon. Good to be here. Your question is a good one. So first of all, they act as a means for you to hedge your risk, right? Taiwo, he touched on this, and I'm just going to expand on it a bit further, right? In Nigeria, over the past, let's say, 10 years, we've seen the Naira's value against the dollar move from about 140 Naira per dollar to where we are right now at 1,500. So that's like a factor of 10 by which the value of your Naira has depreciated in currency terms, right? So you're looking at protection against FX volatility. If 10 years ago you had bought your dollars with, let's say, 1 million Naira, the equivalent of that would be 10 times that value right now, right? This is in a scenario in which you did not do any investment whatsoever. You just held the dollars, right? So that dollar is a means through which you can protect yourself against FX volatility, which we have experienced in Nigeria. It also protects you against inflation, right? Inflation is a funny thing. It's not always immediately evident, right? You go on a weekly basis to buy things, and you don't always feel the immediate effects when prices are creeping up slowly. But over a period of time, that price increase can very, very seriously erode the value of your money, right? And we've been living in an era of double-digit inflation for quite a long time. Inflation upwards of 20% and more. Even with some changes, it's come down. It's still above 20%, essentially. So if your Naira investments are not beating that inflation mark, then your true real returns is that you're losing value year on year, right? So dollar helps you to hedge those risks, right? And yeah, so these are the two things I would say mainly that dollar investments protect you against.
Yeah, that's a strong point about diversification and balancing risk across currencies. So thank you, Somkene. Izima, building on that, given your background in FX and fixed income trading, what macroeconomic factors currently make dollar-denominated investments attractive?
Thank you, Adiola, and I'm also happy to be here for such a very critical topic, and for obvious reasons, this is really crucial in a time like this, especially in our country. So back to your question, key macroeconomic factors to consider, just like the keynote speaker touched on earlier on, interest rates. So from the US side, even down to the home currency side, we have inflation rates, then you have global economic conditions, then monetary policies in your respective home countries, in our case, Nigeria. Then you have GDP, commodity prices, and so on. So for instance, persistent local currency volatility and inflation risk naturally make USD assets more reliable. Why? Because of capital preservation for obvious reasons. So Nigerian sovereign Eurobonds, for instance, they offer yields within a range of 9 to 11, sometimes as high as 12%, which is significantly above comparable domestic instruments on real return basis. So some Kenneth touched on inflation, which Taiwo also spoke on earlier. So like some Kenneth said, it just doesn't hit you immediately. It kind of builds up. So on a real return basis, when you're investing in your local currency, you may feel that, okay, rates at 20%, they're 21%, they're 25%, but what is inflation? In real terms, are you even getting, now you can get rates at 16% and inflation is above 20%. On a real return basis is negative. So we can consider such things because in terms of dollar assets, they can offer you at 9 to 12, like I mentioned earlier, but when you factor in the exchange rates, you tend to earn more. Then also to mention, given the direction of market expectation this year as regards the US Fed in cutting rates, emerging markets like Nigeria will tend to benefit from increased capital flows like this. So this also emphasizes the need for investments in dollar-denominated assets as earlier and as quickly as possible. Then a key factor for us in Nigeria is, I would consider commodity prices. So commodity prices for Nigeria has a direct impact on exchange rate stability, even our FX reserves. And based on that as well, we tend to see and measure how other foreign portfolio investors or direct investors see our markets. Then we also are aware of the fact that a drop in oil prices may lead to weaker naira. So how do you hedge yourself against all of this? Invest in the dollar.
And
So
yeah,
I believe that this just gives a bit of insight as to the macroeconomic factors that we consider in making such decisions. Thank you.
absolutely. Thank you, Izima. You've really highlighted why this is such a relevant and timely conversation today. Bisola, I'll come to you right now. You work closely with high net worth clients. What concerns do they raise most often about investing in dollar-denominated assets?
Hi, Adiola. Thank you. Very important question. So I mean, like other speakers have said, right? Dollar investments is actually there are more benefits to it. So the main concern really most times is about timing. So if I need my dollars now, if I need naira, right? how soon can I get my dollar to then convert it to Naira? So what we then do is understanding the client having issue, so there's no mismatch, right? So if I know you're going to have Naira needs, then I'm investing properly so that you don't run into that issue, right? So we are not putting all of your funds in dollar investments. We're also creating room for Naira investment so that when you need Naira, we mitigate against that risk of conversion and rating. Then there's also the part of, oh, I bought my dollar at 1.7, Naira has appreciated and is now 1.5 and I actually need to sell, you know. So like I said earlier, I mean, we still apply the same strategy, just make sure that we invest properly so there's no mismatch. Then the last thing is, like everyone has said, am I beating inflation? So if I look at the rate you've given me and I look at the conversion, but like we've all said, yes, you're beating inflation, you're going to earn more when you do dollar investment. So basically, that's it.
Amazing.
you.
So one thing popping up here is just that consideration of inflation in when you're investing and considering how dollar-denominated assets helps hedge against those inflationary problems that may arise that you may not see, you may not know when it comes, but they will come. Izima, I'll come back to you. In what scenario would you advise clients to increase their exposure to foreign currency instruments?
Thank you, Adiola. So in most scenarios, it has to do mainly if they have dollar-denominated obligations, which spans across maybe possible tuition fees for their kids or their dependents. Then if they have imports that are to come in for their trade business, then if they have loans in dollar-denominated liabilities. So in terms of interest payments and also medicals, then you have some clients that would have mortgages as well abroad. So yes, I would definitely encourage that they have that. Then considering the home currency level of depreciation, although Naira has been fairly stable, but you never know. So in such a case, it's always good, just like Taiwo said, you build a portfolio, not just on different assets, but also a portfolio of different currencies. So that is an advice as well that I would share with them. Then you'd also have periods of negative real return, like I mentioned earlier. So in this case, in our local currency, so due to inflation and all of that, so it's critical that they explore that as well. Then most importantly, which is what we've been emphasizing on and touching on, portfolio diversification. So access to more liquid and credit worthiness instruments offshore. Thank you.
Thank you, Izima. Very practical portfolio diversification, building a portfolio that consists of different currencies. That context definitely helps investors know when it makes sense. Abisola, from your experience, what strategies have you found effective when helping clients use dollar funds preserve wealth over a long term?
Okay, like I said earlier, the first point is knowing your client, right? So I'm sitting with my clients. I want to understand your investment objective. I want to understand your risk profile. That means what's your tolerance to risk? Are you someone that take a lot of risk? And I also want to understand your horizon, that's your timing, so that there's no mismatch, like I said earlier, right? So the next thing is, once I have an understanding of all of that, I always advise that we create a diversified portfolio. So let's do a mix. Right? We're investing in different assets with different maturities so that there's no it meets your needs. So I'm not putting your investments in just one asset class. I'm diversifying, I'm doing mutual funds, I'm doing fixed income for you as well. I'm also putting your funds in income-bearing assets, and I'm also looking at different maturities. So that way, when you need funds, you can you can use your coupon or dividend while also still growing your portfolio. So first of all, I'll say understanding your clients so you don't mis-sell, and then diversifying their assets. So put in different asset classes. Some clients will say, oh, no, only one fixed income, but it is our duty to advise them and let them know for preservation and to edge against risk. We need to diversify. We need to put them in different investment assets with different maturities. Thank you.
Thank you. Thank you. So knowing your clients, I'm sure that's one point that a lot of our participants today would appreciate and pay attention to. So essentially, long-term preservation is key for wealth planning. So Mkene, what are some misconceptions Nigerian investors have about fixed income investing in USD?
Hi, Dela. Okay, so some of the misconceptions that investors or Nigerian investors have about fixed income investing in USD are as follows. One, there are people who have an issue with the absolute return. That's the just looking at the percentage of the return that they are getting, right? You have people, and this is the point that Izima touched on, you have people who look at Eurobond yield and see 8%, and then they compare it to the yield for federal government bond, and they see a yield of 16, 17, 18%. And in absolute terms, one looks bigger than the other. And if you're not seasoned enough, you may just think, let me go for the bigger number. But again, it comes back to a case of that investor potentially has not considered the impact of inflation on the return. If your yield is 16 and your inflation is 22, then your net return is actually a negative of 6. But if your yield is 8 or 9 and inflation in that country is about 3%, then your actual real return is about 5%. You're making a gain there. That's one misconception that we have. Another is, fixed income instruments are not always the simplest for people to understand. So there is a sort of learning curve for certain people who want to go into those instruments directly, right? My third thing is going to come in with my second point, which is some people also feel like they're required to have a significant volume with which to start investing or getting the benefits of fixed income USD instruments, right? And I can knock out point 2 and point 3 with one thing, which is that's why we have mutual funds, right? Mutual funds are a way for investors to access a sort of market that, one, they don't necessarily have the highest level of knowledge on, and for them to be able to access it at a much, much lower price point, right? So whereas as an individual who wants to buy Euro bonds may need to come with, I don't know, a minimum of 10 to 15,000, you start with a mutual fund, and a mutual fund that is Eurobond focused can get you in at $1,000. This is what the Coronation Dollar Fund does. You come in at $1,000. Your professional portfolio managers are doing this for a pool of investors and doing the investment on their behalf, and understanding the market, giving you all the benefits, mitigating the risks, so that the investors don't have to worry, right? They know that their investment is in safe hands with professionals who are keen on getting the best return for them and know what they're doing.
Okay. Thank you, Somkene. Those misconceptions can really impact decision making. So it's good to clear them up for us to have an understanding and know exactly what we're getting into when investing in dollar-denominated assets as well. Abisola, could you share practical examples or a practical example of how dollar-based investments have helped a client achieve a specific financial goal?
Thank you, Adela. Thank you, Adiola. So I have a lot of examples, right? I'll speak to a particular one. So I have a particular client that wanted his daughter to school abroad. He had always known that, look, I want my daughter to do uni abroad. So when I met the client, the first thing I did was we drew up a cash flow. So basically understanding your savings, your income, your expense, and timeline. So we drew up a 5-year cash flow, and we then drew up an investment plan, right? We did a 5-year investment plan for the clients. We created a portfolio for him and invested in different assets. But what I liked the most was the client's discipline and commitment to this goal. From the cash flow, right, the client knew where to reduce his expenses and where to increase his savings. And what the client also did was, when he earns coupon and dividend, instead of spending them, he was reinvesting back into his portfolio. I mean, the child is in final year now and he's paying the school fees because he knew ahead of time, and then he started on time with discipline and commitment as well. So I'll say it's possible to, like the keynote speaker said, it's no more restricted. It's something you can do. You can start investing now. Once you know your goal, you can start investing now towards the particular goal, and then invest properly. I mean, come to us, we would create a portfolio for you. And in time, yes, you'll meet your goal. So thank you.
Yes, thank you, Abisola. Come to us, we'll create a portfolio for you and achieve your goals. I like that. That's a powerful story, and Abisola, it really brings the benefits to life. So coming back to you, how do you manage liquidity and risk in a dollar-based fund, especially considering the current global financial climate?
Okay, so liquidity management, right? It's an important consideration for anybody who is investing, and especially for a fund where you have multiple entrants. So you need to be able to, in a very short period of time, provide liquidity that suffices for a need that a client has. You cannot always forecast it, but you have to have those provisions. So the first thing that you do, or you want to do as an investor for a dollar fund, is you have laddered maturities, right? So in terms of your Euro bonds, you don't want to put all your eggs into one basket. And by this eggs into one basket, I mean, you don't want to dump it all into one maturity on a far, far away year, right? So you stagger them. You have maturities year on year so that they are staggered. And then you also have those bonds have coupon payments in different months so that you always have a form of liquidity always coming in. And depending on what is needed, you can either, what is needed by your clients, you can either use those coupons to pay them out, or you can reinvest those coupons if clients don't need liquidity at that point in time, right? So aside from the Euro bonds, you also want to have, we'll have bits of exposure for the portfolio towards money market style instruments, right? So fixed placements in dollar terms, things that you do, you place them with reputable financial institutions, tier one banks and whatnot. They give you a stable rate, and you know that your maturities there are also staggered, 3 months, 6 months, 9 months, 12 months, so that you know that there are also these instruments that are going to, that you can convert to cash. They only accrue interest and they are not susceptible to price volatility, right? So you know what it is that you're going to get whenever it is you want to pull out. You're not exposing yourself to having to sell off an instrument at a point where the market may not be the most favorable for the investors, right? So these are some of the strategies that you look into when you are considering management of liquidity in your dollar-based fund, right? Mm-hmm. In terms of risk, what we do is we very greatly assess the credit worthiness of every issuer that we are doing, that we are investing in. For example, a corporate bond issuer, we have to do a very rigorous process of looking at what it is they do. We take into consideration hugely their credit rating, Usually for these Eurobonds and international assets, these ratings are done by international bodies like Moody's, Fitch, S&P. So we look at those ratings and take them highly into consideration. We also do our own analysis of the financials of the company, the dollar-denominated liabilities and assets that they have, and all of those considerations before we step into the decision to make an investment there, right? Because as was said in Taiwo's presentation, capital preservation is extremely important, right? You want to make sure that capital is safe before you make sure it grows. So you don't just go where return is highest, but if you're exposing yourself to too much risk, you're endangering both yourself as a portfolio manager and your client. So you have to protect everyone and take all these risk management steps.
Solid approach, Kenneth. Interesting that risk management is absolutely critical to me, the investor, to you, my portfolio manager as well. But understanding how critical it is to manage your risk is key when moving forward in deciding what kind of investment you want to go with. Ezima, how do you assess currency exposure when developing fixed income strategies for dollar-denominated portfolios?
Thank you, Adiola, for that question. Very critical. So for investments in USD-denominated portfolio, it is important to know that currency exposure is assessed not just in FX mismatch, but issuer-related economic exposure, just like Kenneth touched on. So for instance, Nigerian Eurobonds and USD for repayment risk is influenced by the country's FX reserves and oil revenues. So these are the kind of data macros that you look at to say, okay, where is oil price? And also what are the trends? And in terms of production, then also in terms of other investment opportunities in the country as a whole that is attracting foreign portfolio investors and foreign direct investments. Then secondly, so for non-sovereign USD instruments, just like Nigerian corporates, the issuer's ability to generate the FX revenues for repayment is critical. It's a very key credit filter. So it's very important to know that as well. So wherever your dollar investment is going to, especially when USD is not the primary source of currency for that country, you need to look at the issuer's ability to generate the FX that will be used to pay you back. Thank you.
Thank you, Ezima. I think that was very insightful in the sense that understanding currency risk is definitely a key factor when considering or looking to invest, especially in dollar-denominated or any foreign currency. What investor profiles would benefit most from the dollar-denominated mutual funds and why?
Okay, thank you, Dela. There are different customer profiles, right? No, for all intents and purposes, no two investors are the same because they all have different goals, different things that they consider within their lives that they are more scared of or less scared of, right? And they have different horizons for the goals that they want to achieve, right? They all have different risk appetites. And dollar mutual funds in general are designed to provide a solution for every single person, right? There is a fund that is there for somebody, right? It may not be for person A, but it is for person B, right? So I would say that there isn't a single investor out there who is looking to do dollar style investments that cannot be covered by mutual funds, right? That is the reason why there are so many in the market, right? Now, one thing that all customers have in mind is, especially when it comes to Nigerian investors Nigerian investors domiciled in Nigeria investing in USD, is a somewhat long-term look or look on their investment on their investment perspective. They want to understand that they are protecting themselves from some risks that are not necessarily realized in the short term, but over an extended period of time, they will always, not always, but they are most likely to be realized. So you have investors coming in, they are specifically for our dollar fund, they are looking at somewhat low to moderate profile of risk, because we are looking at a bond type investment mostly, right? What we're looking at is providing them with a regular source of income generation, right? So the bonds definitely provide that. They also provide a level of capital appreciation. So that also serves the investors who are looking towards capital growth as well, not just capital preservation. And then, our fund has a small permissible allocation to US-based equities or dually listed equities like the GTB stock, which was just recently dually listed on Nigerian Stock Exchange and then the London Stock Exchange as well. So we have a small allocation that is available for us to explore that, only 10%, so that we do not expose the fund to too much volatility, but where there are gains to be made, we can make gains there. So it caters to a wide range of people, right? As long as your outlook is, okay, I'm looking towards protecting myself in dollar-based investments for 6 months plus, ideally 1 year plus, but anybody who falls within this category is an investor who can invest with us and who will be satisfied with the service that we'll be able to provide.
Amazing. Thank you so much, Kene. That really clarifies who these funds are for. Essentially, no two investors are the same, but there's a fund for everyone, right?
Exactly.
Izim, I'm coming back to you. Could you share how structured products can enhance the yield or customize risk for dollar-based investments?
So structured products, they allow investors to generate higher returns than the standard fixed income offerings. So by taking specific market risk. So essentially what this means is that it is just tailored to suit you. So it's a structured product that is created bearing in mind what you want to achieve and also in terms of or in line with your risk acceptance level. So you have different types of structured products, some that are principal protected. So for instance, you have a dual currency deposit that is designed for investors with USD inflows, but they have local currency liabilities. So you see, it gives room to satisfy both ends using different currencies. So what you would find is you have certain clients that can say, okay, if FX gets to a certain level, my interest should be converted at this level, and that interest will be used for settling certain obligations. Then you also have structured products like swaps and forwards. So whereby if you're earning returns in dollars on the back of, let's say, Eurobond investment, you can, because the coupons are paid every 6 months. So you can time it and say, oh, okay, the currency may likely appreciate within 6 months. So if you want to maximize that, and let's say, for instance, now what we're seeing is maybe a depreciation trend, you can decide to sell your expected coupons forward. So there's always a solution, FX solutions, FX derivatives, always different opportunities that can help enhance your yield further. So you have currency linked notes, whereby notes are created and they are benchmarked against, it can even be a sovereign, it can be another country's sovereign like Angola, not necessarily Nigeria, or it can even be US treasuries. So there are quite a number of yield enhancement strategies. Then speaking of risk exposure, so like I mentioned earlier, structured products, they are tailored for you specifically, and they bear in mind, okay, this is the maximum risk I can take. So it just gives you FX risk management. So you would have FX derivatives that are available to hedge or monetize your currency views. So you have things like the non-deliverable forwards, offshore forwards that can help you if you see that the curve is going the other way, you can just structure a product around it that will protect you in terms of currency exposure. Thank you.
Thank you, Zima. Great explanation, right? Essentially, structured products clearly offer flexibility, which is always a plus when looking to invest in any kind of instrument at all. And Abisola, in a volatile Naira environment, how do you advise clients to strike the right diversification balance?
Thank you, Adiola. I'll first of all say understanding your recurrent expenses, right? As a client, you need to know what your expenses are. Are my expenses more in dollars or in Naira? That's the first step. So if 40% is in Naira and then 60% in dollars, after understanding that, I also need to know pattern of payment. So do you pay monthly? Do you pay quarterly? Do you pay annually? Is it school fees payment you're doing? Understanding those fundamentals helps with the right investment options. So we're not putting all of your funds in just one currency and then you're moving around, right? So I just put in dollars and then you have expenses in Naira, then you have to change all of the time. I put all of your investment in Naira and then you have expenses in dollars and then you have to change all of the time. So as a client, understanding your expense, your recurrent expense helps to guide you on investment options. It is also important to know that our need changes. So for a client that is paying school fees, is done with school fees and his child has graduated, then his need will change. So it is also important to factor that in when giving investment options, right? You need to know that, okay, need changes and then you need to move with time. But understanding your expenses, understanding your income would help you make the right investment decision. And then in that way, you edge against all of this risk fluctuation, MFX risk and all of that, because you're already in the right mix from the beginning. So I'll say as a client, understand your needs. It will help guide us on instruments, assets to investment options for you. Thank you.
Thank you, Epistola. Understanding your needs, understanding your lifestyle would help essentially strike that balance, which is crucial for stability while investing. Very, very important and great advice to take. Izim, I'll start this final round with you. What role does active treasury management play in optimizing returns from dollar-denominated securities?
Thanks, Adiola. So for treasury management, dynamic asset allocation is key. So what this entails is that you look at your portfolio, structure your portfolio across different dollar assets that can span from sovereign to subnational, corporate credits, and even customer deposits that sit with you. So what you're trying to achieve really is to shift between short, medium, and long-term USD instruments that would make you enhance the portfolio. So, and this is very critical when you think about things like your interest rate outlook. So that has to be considered all the way. So if you have an outlook that rates are likely to go down in a couple of months, for instance, what you should be doing now is positioning yourself at the moment and not just reacting at that till end when the rates would have reduced. So you tend to invest more. Then we are also taxed with liquidity management. So like I said, there are different floats that will come to you, staggered at different tenors, different maturities. So at every point in time, your portfolio should be liquid to an extent that when the expected drawdowns or obligations, you're able to honor those obligations. Then you have, we do currency hedging as well. So it's critical that you hedge your portfolio and you use forward swaps, so many structured products to ensure that you manage your FX settlement risk. Then importantly, market timing is critical in your overall portfolio. So like I touched on earlier on, when your entry point and your exit point are very critical with macro events. So you have a lot of data that come out on a weekly basis. You have critical data that come out on a quarterly basis, on a monthly basis. So you need to always be on top of that and have an outlook so that you can take advantage of price appreciation and lock in yields when the opportunity arises during rate spikes, not waiting till the tail end when the market has reacted completely. So those are critical treasury management plays we do in terms of optimizing returns from dollar-denominated securities.
Thank you, Edema. Absolutely critical. And I think that shows the value of active oversight, right? Just being on top of things and being able to have an outlook about your investments and what is going on around you as well. Abisola, how does Coronation Asset Management position its dollar fund as a solution for both new and experienced investors?
Okay, so what we've done as a firm, right, is curate a product that caters to the need of everyone in the market, retail space, institutional, and our HNIs and ultra HNIs. So our dollar fund, I'll say the entry amount is not prohibitive, right? With $1,000, you can start your investment for new investors, and for existing investors, you can grow your investment by just as little as $100 per time, and you can bring in the $100 at any time, right? The fund is also actively managed by investment managers. So it's not a passive fund. It's not, you just put your money and then whatever happens is actively managed. So this enables us to give our investors the best returns on their funds, right? The rates, our management fee as well is quite good. It's below the industry standard. So you're getting value for your money. Yes, you are not charging what the industry is charging. The industry standard is 1.5, but ours is way lower. And then the rate we give you is net of charges. So if my rate is 5.5, you're getting 5.5, right? I'm not deducting from that 5.5. So you're getting the best from our dollar fund. And like I said, they're actively managed. And it's available for everyone, both new investors, existing investor, retail space, institutional, HNIs. Yeah.
Amazing. So offering rates lower than the industry, I think I speak for all the participants when I say that those are the words that we definitely like to hear. But also just from what you're saying, just reiterating that there's something for everyone, right? There's something for everyone. $1,000 for initial, and then subsequently as little as $100. I think fantastic, Abisola. I think that positioning really speaks to the different investor needs. And finally, what performance metrics should investors prioritize when evaluating dollar mutual funds?
Thank you, Adiola. So every mutual fund has a benchmark, right? And the benchmark is essentially, in simple terms, is a ruler against which you can measure the performance, right? If benchmark is X, then you want your mutual fund to either be doing X or X plus one or anything above that, right? Now, depending on the underlying assets of the fund, that is what the benchmark will be, right? So the benchmark is determined by what the fund is allowed to invest in. So for, let's say, a money market style fund, the benchmark would be maybe the yield on like a US Treasury bill, maybe about 6 months, right? Now, for us, where we have our dollar fund, and being that it is majorly investing in euro bonds, a significant portion of the benchmark is comparing it against the return of the 5-year FGN euro bond, right? Because that is sort of the average tenor of the investments that we're looking at within the product, right? Now, for funds that have exposure to equity, especially if it's a significant exposure to like US equities, then you're going to have benchmarks like maybe the S&P 500 index or something from the FTSE or the Dow, depending on where those equities are going to be invested, right? Those are the benchmarks that you will measure against. And these indexes that I just mentioned, the S&P 500, the FTSE, Dow, if you turn on CNN, and every morning you're going to see them talking about it, right? You don't need to go anywhere special to be looking at it or looking for it, right? It is fairly easy information to access. So as a mutual fund manager, we are required to publish a fact sheet every month. At the end of every month, we publish a fact sheet. And within this fact sheet, we will put all the information there that you need to know. In that fact sheet, we will have the return that the fund has generated, and then we will have the benchmark of the fund. And then we will now tell you, okay, did the fund outperform or overperform, right? So it's always going to be in black and white there at the end of every month for any investor to look at, right? Those fact sheets, we send it out to our investors because we will have their email addresses when they register with us. But it is also available on our website, right? The fact sheets are also available on our website. So even if you are not yet an investor, you can go to our website, click on our fact sheets. It shows fact sheets for all the mutual funds that we have, and you can see what the funds are about, what type of assets they invest in, the performance of the fund, and then the performance of the benchmark, and you can see how well it is that we are doing by outperforming those benchmarks.
Okay, amazing. Great wrap up, and thank you, Sumkini. Thank you, and also to all our incredible panelists for sharing such valuable insights with us today. We hope that this conversation has given you all participants clarity on the opportunities in dollar-denominated investments. So now I'll take your questions. I see some in the chat box already. We do have a lot of questions in the Q&A, and we'll be taking as much as time permits, but please trust that if we don't get to your questions right here, right now, we'll be sending you an email after the webinar with detailed responses, right? So I'll just go straight to the chat box to see what questions are rolling in. So first question I see here, when you say long-term investment outlook, what is the minimum number of years you see as reasonably long-term? 5, 10, 15 years. I think for that question, I'll say Sumkene, if you don't mind.
Not at all. So for long term, I mean, when we like to say medium to long term, right? So it's my preference to say medium to long term. So anywhere from 2 years and above is really where we're looking at, right? So the goal that you're aiming for, as Taiwo mentioned in his keynote speech, it can be, I don't know, a holiday that you are planning to have with your family 2 years from now, or it can be something as long term as you just got married, you have children, or a child that you may not even have the child yet, but you are planning to have children and you want to be looking to protect their future now. You can start by, and that's like an 18-year goal, or you want to start thinking about your retirement, right? You work here, you are making contributions to your pension fund every year. but your contributions are in Naira, and you don't know what the value of the Naira is going to be when you retire in 20, 30, 40 years, right? So, and it's only what you've given to your pension fund that they're going to pay out to you. They're not going to change it to dollars for you. So if you've essentially, in this example I'm going to give, anyone who maybe retired in, let's say, 2019, 2020, 2021, 2022, up to 2023, and they started receiving their pensions after that, they would have seen that the value of what they had saved has crashed by like 5 to 10 times. What it could do for them 5 years prior, it can't do for them anymore. And they are now having to supplement that pension fund either by, trying to get themselves back into the workforce or one way or another, right? So it's all about, 2 years and above, depending on what your goal is. That's what you want to be looking to.
Okay. And my next question, I'll pose it to Tayo, and it says, in the geopolitical environment where you see increasing grouping of certain nations to rival dollar dominance in the global economy, especially with US President Trump pressure on so many nations, do you foresee US investment loss in value in future in the above context?
For now, I don't see any immediate impact on the US dollar. When you look at the American nation, its security prowess, its innovative state speaks to part of what strengthens the US dollar. For any other currency to compete very well with the USD, it's just not about trade, but about the security of that nation. How strong is that nation? If there's any war today, can that nation withstand that war? Can they fight effectively? And if you look at America, they have the security apparatus behind them. They have the innovative industry behind them. And it always speaks to that dollar. That's why for a long time, people have tried to challenge the dominance of the dollar within trade, but it continues to remain the reserve currency of choice across the world. Yes, China is trying, but I still see them a long way off before they get there. Thanks.
Thank you. And while I have you, another question says, when we buy international stocks, I believe they pay dividends also. How do they get to pay?
So it depends on who you buy those shares through. Typically for, if you have a local broker, they'll be the one to receive it on your behalf, then transmit it to your account locally. But if you're invested in a mutual fund, same rule applies. So for example, for the dollar-denominated investment, payments will be made to Coronation Asset Management, which subsequently now makes that payment to you in any designated account you have, either locally or internationally, to ensure that you get your monies. And for some, they just allow you to put your account directly so that you get the dividends or the coupons directly.
Thank you. Can you please explain more on the difference between ETFs and mutual funds, and what are the advantages of one over the other? I guess a summary if possible.
Okay, so basically ETFs are more passive investing, while mutual funds are more active investing. And what do we mean by that? ETFs, you're basically saying I'm betting on the index of the US exchange, or specific indexes or indices within that capital market. So you could say, okay, I want to invest in exchange traded funds for S&P 500. And that means you're basically buying into a portfolio that reflects the S&P 500. So you have like equal rated investment as you have the S&P 500 today in pro rata in your portfolio. But for mutual funds, you have a portfolio manager like Somkene who goes to the market to pick your investments based on an investment policy statement is shared with you at the beginning of that relationship with Coronation Asset Management. So he's told you he's going to invest in Eurobonds, in international stocks, and these are the percentages or the range in which he's going to ensure that those stocks are in his portfolio. So you understand that, okay, this is the type of risk he's taking. So some Connect takes your money and invest it pro rata as is stated in the investment policy statement to ensure that the return objectives and the risk objectives are achieved according to the portfolio that has been set up.
Okay, thank you, Taiwo. And just in line with that, Sumkene, how does Coronation assist in getting
So sorry, Adiola, I didn't hear the full question. Can you repeat that, please?
Okay, it says, how does Coronation assist in getting started in this type of investment?
Okay, so what you need is you need a dollar account, right, from which you can transfer to our dollar account. Yes. Due to anti-money laundering laws and protections, we are not allowed to accept cash, either in physical cash or a cash deposit into the account. But you can transfer from your account, from your dollar account to our account. These accounts can be provided at the end of the webinar. Yes. So, and there is a form to fill, obviously, in which you would detail all your personal information, ID, and whatnot. And that's essentially what is required. Once all that is completed, our sales team will inform you of the successful submission of your application. Once your funds are received, they are attributed to you. You are given a client ID. And then, using that client ID, you can check in with your sales team or wherever to know the status of your investment.
Okay. Thank you. Short and sweet. Abisola, how does one locate a good broker to invest in the US stock market? I like to diversify into US investment portfolios.
Thank you, Adiola. I think I would let Sumkene speak to that question.
Okay, so there are, I guess, generally well-known traders of stocks that are US-based, right? However, what we are looking for is solutions that are accessible to the Nigerian investor who is in Nigeria, right? And being able to trade stocks directly is not always easy or possible, right? There are only a handful of people who have access to this service. And this is something that we are engaging our regulator on to give us the permission to trade stocks on behalf of our clients or have our clients trade the stocks through us. At present, that permission has not yet been granted. When that is done, we are going to publicly announce that because it would be a thing for us to celebrate and be able to let our customers know that they can do. Yeah.
Okay, I have two more questions here that I think you can take, Sumkene. Please, what is your interest rate, minimum amount, and tenor for dollar investment?
Okay, so for our dollar fund, we said earlier, the minimum investment amount is $1,000, right? If you want to do additional investments on top of your 1,000, then it is in lots of 100. But it is at your discretion if you have the funds to invest. So there's no, because I've answered this question in the Q&A as well. So there is no obligation to keep adding 100 on it, like at any specified frequency. It's when you have the funds to additionally invest that you can put that in. And the 100 is just a minimum. You can double it, triple it, whatever you have available to invest is what you can bring in as your additional amount. anything
So
above
would
that 100. Yes.
okay, so would that answer go for this question as well? For the dollar-denominated investment, say in the mutual fund, what is the minimum amount required to start?
Yes, so that answers that. And now in terms of return for our Coronation Dollar Fund, that is currently returning about, let's say, 6.5% year to date, which is a flat return from January to date, right? So that's a fairly strong return.
Okay, before I go to the next question, I do see some hands, raised up. I'd like to encourage you to please use the chat box. If you have any questions or comments, please use the chat box and we'll get to them as long as time permits. So is Coronation offering this service? If yes, what are your charges for your service in percentage?
Okay. So Coronation offers a bunch of different dollar type of investments, right? So mainly we have focused on the mutual fund, the Coronation Dollar Fund, which is the mutual fund, and the management fee for that is 1%. There is also an incentive fee, but the incentive fee is only earned when we are able to outperform the benchmark, right? So that just motivates us to always try and beat the benchmark.
Okay, I do see a lot of questions here about how do we open a dollar-based investment account without a dollar-based account, dollar domiciliary savings account, dollar investments without dollar savings account. How do you identify a reliable dollar-based investment? Something.
So yes, so our dollar fund, it doesn't permit people to move money in naira, right? So as I said earlier, you have to have a dollar account. Now you can do this dollar account with any bank that you are currently banking with. They will be able to assist you with that, right? And the way to invest is just to fund that account. You can buy dollars whether directly from the bank or from a BDC. They will credit it into your account and you can transfer it to our investments account from there. And that's how you can go about that. Can you repeat the second part of your question, please?
Second part says, how do you identify a reliable dollar-based investment?
Okay. I would say before saying how do you identify a reliable investment, I would say the first thing you want to look at is how do I identify an investment that is not reliable, right? So what you want to do is take out all the bad stuff, right? Now, by virtue of the dollar being a strong currency, a strong purchasing power, and being resistant to inflation and resistant to somewhat resistant to currency fluctuation, the returns on the dollar are not astronomical, right? Good returns on the dollar investment are somewhere from 8% to 12%, right? Those are excellent returns, right? If you see anybody that's offering you dollar investments and the returns are like 20%, I think you should be skeptical, like right off the bat. You should be skeptical. Now, another thing is whenever you see investment opportunities, you should always try as much to find out what the underlying asset is, right? You want to know what it is that they are investing in. I don't believe that anyone should invest where they don't know what their money is doing or they cannot find out what their money is doing, right? You should always be able to invest with people who are on the up and up. They can tell you what it is that they are doing with your money. If you have the time, they can sit you down and try and take you through it. They will have all the details, right? Anything that is shrouded in mystery and is just, too good to be true, usually is, right? So you want to be looking at investing with institutions, like if you're investing in the bank, bank obviously has to be registered with CBN. If you're investing with an asset manager, you can confirm that the asset manager is licensed and currently registered with SEC. You can go on SEC's website and they have a list of all the companies that they have licensed and when they are, and the status of their license as at that day, because licenses expire and they will be stricken off the list until they are renewed. So always ensure that that is the case, right? But also just don't do anything that looks too good to be true. Let's not lose our money in the name of greed.
Yeah. Ezima, my issue has always been trying to find dollar investment accounts. I saw the response to use a dollar account to fund the investment, but then there are all these charges when transferring funds between banks. So I like to know what would be the charge to fund the investment account from a Nigerian domiciliary account.
Okay, thank you for that question. So there are some standard charges. So you have the likes of the sweep charges and the transfer charges. So the transfer charges are normally a small percentage of the amount you're going to transfer essentially. So, and these charges are quite competitive. So you can engage us further in Coronation Merchant Bank for more details. And we can always see what we can do in order to provide that service for you.
Thank you. And can this investment, is not still on you, can this investment be used as proof of funds?
Yes. So certain embassies, you can send your portfolio holdings to them, and even your investments in fixed income or even in equities. And normally what portfolio managers like Sumkene and his team would do would give you the current valuation, or they give you the valuation as at the time when you bought it. So yes, you can use it. Embassies honor it.
Okay,
For
thank
funds.
you. Abisola, is Coronation Asset Management related to Access Bank on this presentation in any way?
No, we are not
Thank you.
on this presentation.
Cairo, based on the current US political climate, tariffs, what risk do you foresee as a result? And what happens when a country like Nigeria finally drops USD and joins BRICS?
I don't see Nigeria dropping the US currency and not trading in the US currency. Even if we join BRICS, you still trade in the currency that is easily accessible. We trade with other countries in other currencies. So at the end of the day, is who offers you what currency that you will take. And that's basically what the trade war is all about and everything. With respect to the tariff and what's happening there, I think the amount of trade we're doing with the US is not much, or when you look at it from Africa. So for now, it's not really impacted Africa as a whole or Nigeria. We've not seen any reason why that will have a significant impact on us in the near term. But what we expect is that with all of this tariff war, there's volatility in the market, good opportunity for our investment managers to take positions and earn some good returns.
Okay. And how stable do you think is our monetary policy regarding dollar-backed investments? How flexible and stable will the policies hold as we invest in Forex?
Okay, so you're speaking to Nigeria now, right?
Yes.
Okay. So given the structural reform the president has taken out on the economy in Nigeria, the economic climate is much better than it was 2 years ago. Now we have better reserves. We have more investments coming into Nigeria. We have companies that are now, they have more certainty in doing business. We have our oil production going up. We have all of those indices looking better, with FPIs now more comfortable in Nigeria. And that speaks to the GT Co, listing on the London Stock Exchange, giving credits to that people are now comfortable with the Nigerian economy. So given that outlook and the comfort we've seen in recent times, it's a much better time to invest in dollar-based investment, because people don't or foreigners don't see the economy as scary as they saw it 2 years ago.
Okay. Thank you, Taiwo. Ezima, are you able to explain what went wrong with Ghana Eurobond and where investors lost money?
Yes, I am. That's an interesting question. So I'm sure we're all familiar with COVID. Yes. Hello, please confirm if you can hear me.
Yes, we can.
Yes. So I'm sure we're all familiar with what happened during the COVID era. So Ghana was also really affected. And because Ghana kept on coming into the market, increasing their debts and not staggering it as such, and they did not also have more of dollar flows or dollar inflows coming in that they would use. They were not able to generate quite an amount that they would use to pay down. So it was on the back of I don't want to use the word over trading, but coming into the market to just build up loans and loans and loans beyond their capacity to pay back. Then with the whole COVID event, which amplified the issues around their economy, because you recall there was a clear lockdown, so that trickled in and had a bad effect as well. So they had to go back and restructure portfolio, giving investors two options, either payment at par or discounts, then also restructuring based on your choice, restructuring your repayment strategies, so post default interest, which they are honoring as well. They still honor payments. So it's not entirely bad per se. They've been able to just go back to the drawing board. And if we have been following their statistics, we can see that Ghana has been improving, even in terms of inflation and other macros in their economy. So it's more of a learning curve, and the ability to bounce back has also given further confidence to the to investors that are also looking into the emerging market.
Okay, thank you. Abyssal, I'm coming back to you just on an earlier asked question. The second part of it was, is Coronation affiliated with Access Bank?
Oh yes, Adiola, we are. This webinar is part of our Coronation group, right? But we have some of our mutual funds on the Access More app. Yes, we are affiliated with Access Bank. So when you go on their app, you see some of our dollar investment funds there.
Okay, and another question for you. Are there any plans to have a pound fund investment in the future? This person already has a Naira and dollar fund investment with Coronation and is looking at diversifying some more.
Well, I'll say we are in the works. Yes,
Okay.
we are planning to do that in the nearest future.
So probably this is so take it that all the questions about how to and the minimum amounts have been answered. So just looking through again. Do you have a mobile app that can make experience seamless? Also, this person has a USD account with GTB. How do you deduct from the account so that I can set up a direct debit?
Okay, yes, we have. So the first question, we have Coronation Wealth. When you come on board, you can download the app from your Play Store. It's Coronation Wealth. I can ask the coordinators to put the link so that people can see and download. So yes, we have Coronation Wealth. You could also download the Access More app on your phone as well to access more of our funds. To transfer funds to Ross, like some Kenneth said earlier, you need to have a DOM account in your bank. We would give you our own Coronation Asset account number. You then do the transfer to us. If you have an account, we create a client ID for you, and then we match your funds to your client ID.
And someone is asking here, can they pay cash?
No,
or
you
must
cannot.
it be a transfer?
It has to be transferred. We do not accept cash.
Okay. Someone wanted to clarify on the additional investment of $100. Can you speak more to that?
Okay, so for existing investors, that's for clients that already have accounts with us, you can top up your investment with minimum of $100. So the $100 is not set. We're just saying you want to add to your investment, the minimum amount you can bring in is $100. If you have more, you can put in more. But like some kind of said again, it is not compulsory. It is personal choice. So I want my investment to grow, and I'm disciplined enough to put in more funds. So you can set aside every month $100. I mean, as it suits you, but the minimum is $100 to your existing investments.
Okay, and will capital gain tax also apply to this?
No.
No. Okay. Okay, one more question here.
So sorry, let me get for your question. The question is, will capital gain tax apply to the additional funds?
No, I believe it will be, there's a separate question. So I believe the person is speaking about your investments as well.
Okay.
No, okay. And when transferring for investments, what are the charges to be paid? And will it be routed to US banks before getting to Coronation accounts?
So for our funds, we have different account numbers. Some have for some of our funds, you have to route it, right? And then some you can do the direct transfer. And for charges.
Okay, thank you so much, Adesola.
Sorry, some Kenneth has something more to say to this.
Please go.
Yeah, so regarding correspondent banks and whatnot, it depends on the bank that you're moving the money from, right? If the recipient bank is the same as the transferring bank, then there's no need for the money to be routed through the US. So that's essentially just yeah. But if you are moving from one bank that is different to another, then yes, it's going to be routed through the correspondent bank.
Okay. Okay, that's pretty clear. It might seem Naira investments are making more returns at the moment. Naira is even gaining against the dollar too. What is the attraction for investing in dollar in this present market?
Okay, thanks, Adil. I think we've touched on this. So, like we said, it looks like, but there's an FX factor. So that's what this whole seminar or webinar is for, encouraging people to invest in dollar-denominated assets. So, for instance, right now, Naira is at an average yield of 18%, and you get a Eurobond yield at 9%, but there's a significant elephant in the room, which is the exchange rates. So we don't have a crystal ball. So it is just good to diversify your portfolio in a way that it's a portfolio, like the keynote speaker said, of different currencies. So you just don't look at it in absolute terms. So my question to the person that asked this question is, what is inflation rate today? And does it really compensate you for the 19% or 18% you have at the moment? Even though that we've seen stability in the exchange rates, but it is still advisable to always diversify your portfolio in different currencies. Thank you.
Thank you. And for someone that has Naira, can they source dollars from Coronation to do a dollar investment?
Okay, so for that, there are CBN regulations that guide that. So if you're going to buy dollars, you need to fund it yourself. You need to deposit dollars into your account by transfer, and doing a swap from naira to dollar through the bank directly, you would need to qualify for CBN approved certain type of transactions. So it depends on if you're remitting trade obligations or for school fees or for PTAs. So those are allowable items by the central bank. So any other thing outside of that, you need to fund your account in dollars
Okay. And
directly for
can
those
dollars,
investments.
okay, can dollars be transferred to Coronation from any bank DOM account?
Oh, yes, yes, through a correspondent bank. Yes.
Thank you so
Okay.
much, Vivian. Sumkene, for this dollar investment, Nigerian banks don't allow transfers to other banks, and it seems Coronation only takes this type of investment in their Zenith Bank. How can someone with Pay Access or First Bank dollar account invest when you can't make a transfer to Zenith?
Yeah, hi. No, that's not accurate. We have a Access dollar account and we have a Zenith dollar account. I receive into both. That's for our private money market style dollar portfolio. But even for our dollar fund, we receive from any account. Sometimes it may be a restriction from their bank based on the fact that maybe the money they are trying to move is what I think is called a cash transfer, which means the cash that was deposited into their account and then try to transfer it from there, which is not permissible. It's part of the anti-money laundering prevention thing that I mentioned earlier. The original source of transfer must be a transfer so that the history of the money can be traced in for combating money laundering and terrorism financing, right? So there's legitimate reasoning around that being the case. So if a client is not able to transfer from their bank to us, then the likelihood is because they deposited cash into their account and they cannot then transfer that cash back to them.
Someone is asking, is my capital guaranteed?
Okay, so like I said, we have a fixed income dollar portfolio. It's a privately managed portfolio that invests in money market style instruments, extremely low risk. And in that, your capital is absolutely guaranteed. For the Coronation Dollar Fund, which invests in bonds, I would say your capital isn't 100% guaranteed because there is like a small there's a small chance of volatility either on the bonds or on small exposures towards equity. But the fund quite is quite what should I say, is fairly risk averse, right? So the likelihood of capital erosion in the fund is very, very low. Very low.
Okay. Do you have any other dollar-denominated investment products with higher rates than 6%? I had someone mention investing in Eurobonds. As far as I know, Eurobonds tend to offer higher rates. Can you speak to that?
The 6% that I mentioned is year to date. If we were to annualize that, that would now give you a return closer to 11, closer to 12%, right? So the rate that they're quoting for the Eurobond is an annual rate. The rate that I quoted for the dollar fund is a year-to-date rate. They are not always, they are never the same thing. And one is a absolute return, which means that you do not need to prorate what you are calculating. You take your money, you multiply it by the 6% I'm giving you, and that is your exact return. Whereas an annualized rate is more like you have to prorate it over the number of days for which your investment has sat. So if I were to analyze the 6% that I quoted, then you're going to be looking at an investment return of about 11% compared to if you're looking at the Eurobond yields, which are about now are like 8, 9, 10 if you are getting towards like 2050 maturities possibly.
Okay, thank you, Somkane. Izima, can I transfer my investments in Eurobonds from another investment house to Coronation?
Yes, you can. You can. So what you would do is just send in your instruction. We'll give you our Euroclear details, and you give us the Euroclear details of the other bank that is transferring your Eurobonds, and it will be held in our custody.
And this person I earn in pounds. How does this type of investment add value to my investment?
Okay, so you earn in pounds. We can structure different investments that can tailor your obligation. So the question is, which is part of the profiling, is your obligations mainly in pounds or in USD? Whatever the case may be, we can work with that. So it's still about profiling the client. Then after the profile, then we can speak more on the kind of investments that will be tailored to that. But like I mentioned earlier, you have some structured products like dual currency deposits, which can really help this type of individual given this question. So you can maximize even on the pounds end with this structure.
Okay, thank you. I think I have time for just one more question. And I'll throw it to Tyro. It says, awesome presentation, Tyro and co. What would happen to dollarized investments when the current tariff war is causing serious market volatility / inflationary pressures, and same is triggering higher increased costs and sell-off in US equities? What is your take in this offering, the way we can invest?
Okay, so in the world of investing, you have value stocks, you have growth stocks, you have fixed income. For tariff wars, how could it affect fixed income? Maybe affect the yields in the US yields, but if you have a very good portfolio manager who is actively monitoring the market like Somkane does, you'll be able to trade in and out of some of these positions when he sees that the tariff war wants to impact the return that is promised the client base. So what we typically say in that instance is that tariff war will happen, Israel war will happen. Our job is to ensure we're monitoring the market to ensure that all of these issues globally do not affect your investment. We manage the volatility well. Same for equity. If you're in a very good stock or you've invested in a very strong company, irrespective of what's happening in the tariff war, in the short term, the stock might go down. But in the long term, you're going to see the demand for the products of that company. We saw that with NVIDIA earlier in the year, whereby when the tariff war started, the price of NVIDIA went down. And immediately, China and some other countries, made some demand for NVIDIA products. The stock for NVIDIA shot up and enabled, very good returns on investments held for people that held the NVIDIA stock. So what we're trying to say is that volatility in the short term will happen. As investors, we always recommend that you do not worry about the short-term volatility. What it gives us is opportunities to go in and out of certain positions to make some extra returns and to ensure that we give you the right kind of return on your dollar investment. Thank you.
Thank you, Tyro. And to all the participants that have asked questions that have not been answered, please be assured that we will be sending you an email after the webinar with detailed responses. So thank you again to all our participants. This has been an incredibly insightful session. As promised, we'll send you the presentation and the link to the recording of this webinar. Also, we will share answers to the questions that were not addressed, and a survey form to submit your interest if you are considering investing in the Coronation Dollar Fund or any of our other offerings tailored to suit your personal needs. On that note, we would like to take the closing remarks, and I would like to welcome Esohe Uruhide, Head of Sales and Client Coverage at Coronation Asset Management.
Thank you so much, Adiola. My name is Esohe Uruhide. I head sales and client coverage here at Coronation Asset Management. As we draw today's session to a close, I want to appreciate everyone for joining this important conversation on building wealth with dollar-denominated investments. Your time and engagement means so much to us. Today, we have highlighted a key principle of smart investing, which is the power of diversification. We hope the insights shared have given you a clearer understanding of how dollar-denominated investments can help you build a stronger, more resilient portfolios wherever you are, and why this strategy matters for long-term wealth creation. A sincere thank you to our speakers for sharing their expertise and practical perspectives. Your contributions have enriched this discussion and provided our audience with actionable steps to secure their financial future. More importantly, thank you, our audience. Your participation and curiosity inspire us to create platforms like this, designed to empower you with the knowledge you need to make informed financial decisions. As you leave today, remember this takeaway. True financial security comes from planning ahead and choosing strategies that position your wealth for both resilience and growth. Dollar-denominated investments can be a powerful component of a well-diversified portfolio. Like Yemi said, at Coronation, we are your prosperity partners, committed to supporting you with practical solutions and expert guidance every step of the way. If you'd like to learn more about the Coronation Dollar Fund or any of our investment products, please reach out using the contact details displayed on your screen. We are always happy to support you on your wealth journey. Thank you once again for being a part of today's session. We look forward to engaging with you in future events.
Thank you, Esohe, and thank you once again, everyone. For questions, further inquiries, or personalized investment advice, please reach out to us via the contact information being displayed. Stay informed and keep building financially resilient portfolios with Coronation Asset Management. Thank you, everyone.